Hey guys, what's up? I want to give you guys some tips and actually a day trading hack that I use every single day in the market that helps me be profitable. Now, this ain't the only strategy that I use, it's just one piece of it, but it'll go a long way if you guys use it and implement it. So, let's jump right into it. The strategy that I use, and you guys could look it up, I didn't make this strategy, anything like that. It's previous day high and previous day low strategy. So if you guys Google it, you guys could do your own research. But I'm going to give you the gist of it and how I use it every single day to actually bank on the market. So the green line is previous day high, and the solid red line is previous day low. If you don't know, obviously that's the previous day's high. As you can see, if I zoom out, you see how that's previous day high and it's the previous day low. That's the range. So when you hear me say in the range, I mean in between previous day high and in between previous day low. Now I'm going to give you guys a couple different setups and a couple different examples so when you guys see it, you could identify it and know what to do. So with that being said, let's jump right into it. Actually, guys, if you find any value in this video, click the like button, please. It'll help out the YouTube so much. So let's get it. Okay, as you can see, this is where the market opened. It opened in the range. So in the range is between the previous day high and previous day low. The first five candles, if they open within the range on the 5 minute time period now. I only trade on the 5 minute time period, so this works for the 5 minute time period. If the first five candles close within the range in between previous day high and low, it's expected to be in the range for the day. So, with that being said, I know that it's going to stay in the range. Now, is it 100%? Nothing is 100%, but majority of the time, it works out the way it should. So, as you can see, I know hindsight's 2020, but you guys could do your own DD and C. Also, I use a custom indicator that maps out the previous day high and previous day low for me. But if you guys don't have an indicator for it, you can literally just draw a line and map it out yourself. So just keep that in mind. So as you can see, the first five candles closed in the range. It's expected to be in the range unless it's a late day breakout. Now, obviously, as you can see today, the first five candles were in the range. And what did it do all day? It stood in between the range. Now, like I said, nothing is 100%. You're going to see those times where it pops up above it and just keeps running, or, it pops above previous day high and then gets rejected. So just keep that in mind. The first five candles, it's expected to be in the range for the day unless it's a late day breakout. So if you see a breakout to the upside later in the day, I would consider that a strong breakout. I would enter when it breaks previous day high and I would ride it up. Same thing for previous day low. If it's a late day breakout to the downside, I would obviously jump in on puts, and this would be my stop. So that's the first setup you guys want to look for. If it opens in the range and then the first five candles stay within the range, it's expected to be in the range for the day. It's range bound. So for the next setup that we look for with the previous day high and low, let me zoom out here, guys. I have it mapped out for us right here. So I obviously mapped it out. So as you can see, this is previous day low right here, and this is previous day high. This is the highest point of the day. The first candle, see how the first candle opened in the range and closed outside of the range? That's considered a strong breakout and usually trends that way for the remainder of the day. As you can see, it trended that way for the remainder of the day. So, obviously, first candle, strong breakout, and then it trends that way for the rest of the day. So keep that in mind. Now, obviously, nothing's 100%. If you guys get in, wait for the candle to close. If it goes below previous day high, you would obviously get stopped out. But just keep that in mind. That's for the upside. So, first five candles before closing the range, expected to be in the range. First candle, that's considered a strong breakout. And then trends that way for the rest of the day. Now, let's go over here. I'll show you a downside example of it. Just give me 1 second. Over here on Netflix. Bear with me, guys. I gotta zoom. Where is it? Oh, right here. Here it is. Today. So obviously today, previous day high is the green. Previous day low is the red. As you can see, strong breakout on the first candle. And what does it do? It stays out of the range for the rest of the day. See how it just tapered off for the rest of the day? So, like I said, first 5 candles open up in the range. It's expected to be in the range. First candle closes outside of the range. That's a strong breakout and expected to trend downward for the rest of the day. So that's the downside to it. Okay, so we're gonna run a Tesla real quick. Now this is what happens if it opens up below the range. Now, if it opens up below the range, so obviously this is previous day low and this is previous day high, right? Obviously previous day high, previous day low right here. So if after hours and pre-market you could see it dropped off, it opened below the range. Now, I wouldn't touch this. I wouldn't touch it until it gets back up to previous day low, right? And makes it resistance, and then I would, if it pops above it and it looks strong, I'm gonna get in calls and I'm gonna ride it up back in the range. My previous day low will be my stop, or I'm gonna wait for it to get to previous day low or around previous day low, and if it looks like resistance, fails to keep breaking out, I'm gonna get in and ride it on puts. As you can see, it didn't get too close, but it got close enough to previous day low. Couldn't make it support, and it just died for the rest of the day. Now, that's for opening. That's if it opens below the range. Now, open above the range. I got an example on SPY. Just give me a second. Let me get there, guys. It's a little bit back here. Right here. So, obviously you can see this is the previous day high. So we're talking about, say this is today. Technically, in theory. Yesterday, this was the previous day high. Obviously right here would be previous day low. Now you see it opened up above the range. It opened up above previous day high. So I wouldn't touch it until where it came down and tested previous day high. Now, if you see it breaking down below previous day high, you could get in for puts, and that will be your stop, and you ride it down into the range. But as you could see, it made previous day high support. As you see it come over here, makes it support, you would enter and ride it up and make some profit. So those are the setups that I look for. That's what I look for on a previous day low and previous day high. Also, previous closing price is something that I keep an eye on. This is just one of the strategies that I use with my indicators. Also, there's a gap fill strategy that I use, and there's a certain way I use the indicators with the 9 EMA and the 21 EMA. So, thanks, guys. If you guys have any questions, leave a comment down, and I'll get back to you guys if you have any questions. Also, click the link, guys. Check out the website. Also, guys, like it up for me if you find any value in this. Like up the video to help with the algorithms. I appreciate you guys. Have a good night, guys. I know it's a late night, but I'm always burning that late night oil, so that midnight oil. Have a good one, guys.